Kevin Green is with me. We've seen the dollar showing more weakness, the 10-year bond yield pulling back, and stocks here moving higher. And plus the idea that we could, in fact, get this rate cut in July. Let's see what you're looking at here this morning and the levels you're watching. Kevin Green, good morning.
Good morning, Nicole. Yeah, I mean, if you're kind of looking at it, once again, we're trying to get away from that 6,100 level to the upside here. And let's say that yesterday, obviously, it was a little bit weak when you're looking at the market breadth overall, but we were still trying to hold up, especially when you're looking at the mega cap names like NVIDIA, which continues to outperform. Now, this morning, we have gone above that 6,100 level here, sitting at around 6,112. And the first level that I'm looking at to the upside is going to be 6,130. That was kind of similar to what we looked at yesterday here. And if we are able to break 6,130, there is actually a fair amount of activity at 6,150, Nicole, and that would get us to those all-time highs. Hopefully, we're able to close above those. Any type of support to the downside, 6,100 is going to be your first area that you're really focusing on for some buyers to potentially step in, and any breakdown below that, 60.55. Overall, once again, you'd like to see the market breadth kind of expand a little bit more than what we saw yesterday. Liquidity, if you're looking at it, is still for the most part there. It's kind of declining a little bit, but we're not seeing a lack of liquidity. You're just seeing maybe a little bit of a slowdown when it comes to volume in some equities out there that usually probably sees higher volumes around this time of the year here. But overall, once again, we have some economic data tomorrow. PCE is going to be a big headline mover that could potentially be a situation where that gives the bulls enough confidence to break higher. But we don't see any type of fundamental breakdown at this moment. And hopefully the news headlines kind of hold up in order for us to get a green day today and maybe an all-time high today.
Yeah, looking forward to that PCE print. The claims that came in today were better than expected. GDP slumped. So we're continuing to get in different pieces of economic news. But that PCE tomorrow, the inflation print that the Fed loves to look at, certainly is number one, at least on the Fed's mind. How about what you're looking at when it comes to volatility?
Yeah, what's interesting, if you look at the S&P 500 compared to the VIX, Nicole, yesterday we had the lowest close since February 20th, and that was pretty much the day after we made all-time highs. So we kind of made a little bit of a round trip when it comes to volatility. Now, could there be an environment for us to have continued gains? It can be, but this also is an environment where if you were concerned about maybe valuations at these levels, concerned about geopolitical risk maybe coming back into the market, or you're just concerned about valuations just in general, which are for the most part, a little bit stretched. Hedges right now are fairly cheap, especially on the put side. So this is one of those situations where complacency is kind of being priced in, optimism is being priced in right now, and it's easier to re-rate the VIX to the upside at these current levels than it is for it to continue to melt to the downside here. So a very interesting turn of events. Close to getting to all-time highs, VIX getting to some pretty low levels once again. And this is an interesting kind of correlation that we've seen, but I would just kind of be cautious here at these levels. These hedges are relatively cheap. You can go out in duration, you can go out in time and be able to protect the portfolio. Yes, it might eat into rates of return on the overall portfolio, but if you would like to have some peace of mind, now is kind of that time where you have the ability to do so on a relatively cheap basis.
All right. And just quickly, I know you're looking at commodities with copper in focus. Tell me about that story.
Yeah, this is actually an interesting one. Copper's up about 3% in today's session here, Nicole. And what we are actually seeing is another one of these short squeezes in the metals market. Not so much when you're looking at the NYMEX contract, which is what we are looking at right now, but when you're looking at the London Metal Exchange or the LME, we saw actually a really aggressive short squeeze that took place in this backwardation between current day contracts and next day contracts here. And you are seeing physical traders really kind of getting rolled over. What's really interesting about this dynamic, though, is that inventory at the LME is actually at very low levels. The last time we were at these low levels was back in February of 2023, and you could actually see maybe a potential squeeze once again to the upside when it comes to copper. Somewhat similar to what we saw in gold in January and February of this year. Now you're seeing it in the copper markets because a lot of industrial players and producers, materials companies as well, are trying to get ahead of a potential tariff that can be put in place in September. And it's going to be very difficult for us to kind of get back backfill the inventories at the LME. And in fact, this is one of these companies, Southern Copper, it's going to be on the next chart, that actually has a very interesting chart setup given the fundamental environment that we have here today. The stock is up over 4.5% so far, and it is in this bull flag type of pattern. We had a bullish trend to the upside. We have seen it consolidate here, but this is the weekly chart, and now it's hitting a critical area of resistance. Actually around that 103, 103 and a half level is a critical area here. But if you look at the MACD below, we are in a bullish formation. That 12 EMA is above that 26 EMA, and this stock can get a fair amount of portfolio or an institutional flows because there's not a lot of copper miners that are out here, and this is one of the bigger ones in the world. So something to kind of keep on the radar, similar to what we talked about 2 or 3 weeks ago, Nicole, if you remember that MP Materials and the whole precious metal and critical minerals kind of story. This is somewhat similar to that. Let's see if this chart action is going to kind of mimic what we saw with that MP chart a couple of weeks ago.
All right. Thank you for all of that. Kevin Green, great to see you this morning. Appreciate it with the S&P 6,114 right now as we speak.